Can my startup raise venture capital? 99% of all companies that are started never raise any venture capital funding. So, how do you know if your company is that one company out of 100 that actually should raise venture capital? In today's video, I'll share with you my nine-step checklist to understanding if your startup likely qualifies to raise venture capital. I hope you like it. Hi, I'm Brett. On my channel, I help early-stage startup CEOs like you raise money and grow your startup. So if this sounds like you, then hit the subscribe button and the bell so you get notified every time I release a new video. Let's get started. Before I go through my list, I want to emphasize that there are always exceptions to this checklist. However, by and large, the more of these boxes you check, the more likely it is that your startup is fundable by a venture capitalist. So let's start with number one on my list. Number one on the checklist. You're solving a painful problem for your potential customers. Right or wrong, venture capitalists do what is called pattern matching. This means they will see how your startup matches up against other successful startups that they have invested in or are aware of. Solving a painful problem is usually the first item on an investor checklist. Indeed, I found this true with every successful startup CEO I've worked with. For example, Ray's company solved the problem of processors using too much power in the high-performance computing industry and raised over $200 million in venture funding to date. Let's move on to step number two on our list. Step number two on the checklist. You have the right team to solve this problem. Great. You've identified a burning problem that your customers have. Investors want to make sure you have the right team to solve this problem. This doesn't necessarily mean that you need 20 years of industry experience or vice versa. It does mean that you have the right team to solve this problem. In my case, an experienced team was absolutely critical because of the industry we're in, analog integrated circuits. Required experience to win. The 20 years of direct experience that each of my co-founders and I had was a key reason we were able to raise our initial $12 million in venture capital funding. However, sometimes experience isn't necessary. This is especially true in emerging industries and markets. Two great examples are the founding teams of Facebook and Google. Let's move on to number three on our list. Number three, you are addressing a big and growing market. Investors have to make money. That means an early stage startup needs to have the potential to generate investors a 10x to 30x return on their investment. For example, if you're raising $1 million, your initial investors will be looking for a return of $30 million. Investors need a way to sell their investment in your company. They will not invest unless this path exists. To make things even more complicated, the investors in each subsequent round of funding need to be able to generate returns that will move the needle on their fund, which means generate a significant return for them. Let's move on to step number four on our checklist. Number four, your product or service has a unique way of solving the problem. Most VC-funded startups have a unique way to solve a problem that is difficult or challenging for others to execute. For example, my company was able to reduce the power consumption of analog integrated circuits by mastering a technology called deep sub-threshold technology. Now, this is what VCs call your secret sauce, and that was our secret sauce. You have to find yours. Most successful startups have something like this. You'll need to identify and explain what yours is to raise venture funding. Next, we move on to number 5 on our checklist. Number 5, You have a plan to keep growing the products or services you offer. Most successful startups are not one-hit wonders. In other words, you have a vision of how you are going to conquer the world. It might be as simple as how you are going to add more and more features to your initial product, or it might be how you are going to expand from market A to markets B, C, and D over time. This is how the market opportunity size of your company grows over time. For example, in my company, we started with products aimed at a $6 billion market. However, our plan, which means our vision, was to develop products aimed at multiple markets worth $60 billion. Investors are interested in both how you start and how you will grow. That's why it's important to tell this part of your story. Now let's move on to number 6 on our list. Number 6 on the checklist. You will have significant advantages versus your competitors. You want to explain the competitive landscape to your prospective investors in a way that simultaneously shows how you have significant advantages versus the competition and explains how all of your competitors, big and small, fit in the marketplace. You can position yourself as an expert to your investors if you do this well. This is what Airbnb did in their pitch to investors. Watch this video for more. Next, let's move on to number 7 on our list. You have a realistic strategy for making customers aware that you exist. It's not enough to have a great product or service. You need to make customers aware that you actually have something they need. That's where your go-to-market strategy comes in. You don't need to recreate the wheel. It can be as simple as using your network to get your first group of customers. Now here's a pro tip. Focus on 1 or 2 go-to-market strategies at most when you're starting out. Next, let's move on to number 8 on our checklist. Number 8, you have a business model that will be easy to execute to make money. At some point, every company needs to start making money. In order to have an investable company, you need to demonstrate to investors how you are going to make money. Again, the simpler the better. Our business model as an analog IC company was that we were going to sell our products for a set price. That's as simple as it gets. In fact, ours was so simple that we didn't even need to tell investors what it was because it was obvious. Next, let's move to the final one on our list. Number 9 on our checklist. You have a financial plan that makes sense. Maybe it will surprise you that investors will develop a financial model of your company before they invest. You'll want to estimate your revenue by year, your expenses by year, your costs, your headcount, and how much money from investors you expect to need through the life of your company. You'll want a detailed income statement, balance sheet, and cash flow statement that you can simply summarize. The best example is LinkedIn's Series B pitch deck, which does this really well. Oh, and don't put that your estimates are conservative like LinkedIn did. That's a mistake. Now, if this content is resonating with you, then please hit the like button right now. One final thought. There's a reason that your startup pitch deck should be organized in a certain way. You may have noticed how closely the checklist I've outlined matches the slides in a good startup pitch deck. The reason is that investors want to know the answers to specific questions to determine if your startup meets their criterion. Your goal isn't to make it difficult for investors to understand if you meet their criteria. Your goal is answering these questions in a way that makes it easy for investors to determine if your startup meets their criteria. Do this well, and you'll greatly increase your chances of raising funding. What did you learn from today's video? Put your answer in the comments column below today's video. And if you have any questions, put them in the comments column too, and I'll be happy to answer them for you. Now, I have one more thing for you today, actually two. And the first one relates to what we've been talking about, and it's my free startup pitch deck template. It has all the slides you need to develop an awesome pitch deck. Click the link below today's video and it's yours for free. And if you haven't already, then join my free group of startup CEOs, Zero to Pitch. It is a community for startup CEOs focusing on growing their early stage startups and startup CEOs raising money for their early stage startups. Click the link below this video to join. Finally, click the subscribe button to get notified every time I release a new video. I'm Brett at brettjfox.com. Thanks for watching today. Take care. Bye.